Kia ora, and welcome to the CoreLogic Property Market Update for Whiringa Anuku, October 2024. Optimism has struck the Aotearoa property market, helped by another cut to the official cash rate, known as the OCR, taking it to 4.75%. However, that optimism is yet to translate through to the formal measures of property value change, for now. While sales volumes have started to pick up seasonally, values continue to fall away, as the improved demand meets still high and rising listing supply. The CoreLogic Home Value Index, or HVI, for Aotearoa fell 0.5% in September, the smallest fall since April, but the 7th monthly fall in a row. Value change on an annual comparison is also back into the negatives, as the mini resurgence from the end of 2023 is now fully reversed, essentially proving it a false dawn. That mini resurgence was predicated on the change in government, improving regulations for property investment, which happened, but also on interest rates genuinely falling, which they didn't. Now we're in an environment where the OCR is down 75 basis points from its peak, with another 50 basis point drop potentially on the cards at the end of November. That'd take it to 4.25% in advance of Christmas, and could see the carded one-year fixed rate fall to well under 6%, from a peak of about 7.3%. Indeed, some banks have already been offering a sub 6% rates behind the scenes. Given the borrowing power that is going to create, it's fair to say the optimism for homeowners and mortgage holders alike is warranted. We should see the recent downturn end very shortly, to be replaced by some level of growth, albeit somewhat constrained growth. Barriers to a more substantial bounce back in value growth include mortgage affordability remaining stretched, especially at a time when job security and certainty is relatively low, and the economy continues to stutter along in recession. The elevated level of listings means buyers have the pricing power too. Assessing value performance by location shows the recent weakness has been harsher on those in Te Ika Maui, the North Island, than Te Waipunamu, the South. Property values in Kirikiriroa Hamilton, Tauranga, Te Whanganui-a-Tara Wellington and Tamaki Makaurau Auckland have fallen by more than 2.3% over the last 3 months. While the drop has been more muted in both Ōtautahi Christchurch, negative 0.3%, and Ōtepoti Dunedin, negative 0.8% over the same period. The trend continues across most of our other main urban areas too, with only Whanganui and Rotorua and Te Ika Maui, the North Island, bucking the trend of a more than 2% value decline since June. In Te Waipunamu, the South Island, Whakatu, Nelson values are indeed up 1.2% over the last quarter, and Tahuna, Queenstown up 0.7%. It is worth noting that different patterns can occur below the city level, particularly for somewhere the size of Tamaki Makaurau, Auckland. To really dig into the value change trends at the suburb level, you can check it all out using our free-to-use Mapping the Market tool. The CoreLogic buyer classification data helps us to paint a picture of which buyer groups have been active over time. While first home buyers had been continuing to adjust their expectations to get into a relatively difficult market in recent years, they appear to now be facing a bit more competition from multiple property owners, whose share of purchases has trended up since April. The recent release of the latest census data showed home ownership had increased over the last 5 years, reinforcing that point of first home buyers doing whatever it takes to enter the property market. According to the census, in 2023, the home ownership rate was 66.0%, up from 64.5% in 2018. There were interesting regional trends too, with both Waimakariri and Herewini-Selwyn sitting above 80%, but Kirikiriroa Hamilton, Te Whanganui-a-Tara Wellington and Tamaki Makaurau Auckland all below 60%. Affordability and availability of property will both be playing a part in these respective trends. Looking ahead, in particular at some of the macroeconomic influences, and a slowing rate of growth and migration will likely see reduced pressure on housing. In fact, it probably already is, with rental growth also tailing off, and in some cases, namely Tamaki Makaurau Auckland and Te Whanganui-a-Tara Wellington, rents have actually decreased. Both of these factors, along with the aforementioned struggling economy and labour market, add to the headwinds which will limit future value growth. However, the Reserve Bank appears willing to assist via a loosening in monetary policy. This is especially true while they remain confident of the Consumer Price Index, or CPI, showing inflation not only under control, but also expected to remain around that 2% midpoint of the 1 to 3% target range. The housing and lending market will remain of interest to the Reserve Bank, even if they don't have any direct targets to worry about. A lift in high loan-to-value ratio lending for investors shows they're willing to borrow the money when it's available, though the Reserve Bank will take solace in the fact that debt-to-income limits are now in place. While they're not currently having any effect due to still high interest rates limiting borrowing capacity, the forecast interest rate track could see the DTIs kicking into action sooner than otherwise expected. That's yet another headwind which is likely to hold back value growth. Meanwhile, encouraging government announcements for the new build sector will be welcomed with open arms. The underwriting scheme for larger developers struggling to get pre-sales should enable those developers to act with certainty and confidence within a construction sector that could still have time to run on the downturn. Things aren't as bad as they were in the past, and falling interest rates will start to help now. But an air of vulnerability for the sector has lingered, so it's long overdue. There's a positive outlook from the plan to streamline building consent processes too. We must continue to build more houses and preferably faster. Safe to say, there's never a quiet time in the property market, so make sure you follow all our news updates on the CoreLogic NZ social channels, including LinkedIn, Instagram, X or Facebook. Don't forget to download our latest monthly chart pack and subscribe to the New Zealand Property Market Podcast on all good podcast players. Mā te wā.